John, take a look at shares of United moving a little bit higher after the company reported a smaller than expected loss for the first quarter, losing 63 cents a share, 10 cents better than what the street was expecting, with revenue coming in line with expectations, roughly speaking, at $11.43 billion. Revenue per seat mile, that was right in line with what the street was expecting, between 22 and 23%, at 22.5% increase versus the first quarter of 2022. Cost per seat mile, down fractionally. Let's call it basically in line with expectations, which was going to be, flat to down 1%. United says near-term demand is as strong as expected. But here's another reason why shares have been moving higher. The guidance for the second quarter, EPS of $3.50 to $4 a share. The street's at $3.05, with revenue expected to grow 14 to 16%. That's in line with street expectations. Cost per seat mile, flat to up 2%. And international demand, this is the interesting stat here in the earnings and the guidance, growing twice as fast as domestic demand. And the full year guidance, they are not changing it. They remain expecting to earn $10 to $12 a share. That is significant. They are reaffirming that guidance because the street's at $8.62. So there clearly is much more optimism at United Airlines about the rest of this year in terms of business. We got a lot to talk about with Scott Kirby, CEO of United Airlines. Don't miss our exclusive tomorrow morning on Squawk Box, 7:30. John, once again, United shares moving a little bit higher on better than expected guidance, as well as a Q1 loss that is smaller than expected. John, back to you.
Looking forward to that. Phil, question for you. I see this headline here that says United's flight and seat cancellation rates were the lowest of any U.S. airline despite the weather. Is that something investors should pay attention to, showing that they're doing a good job running this? Or what should we be listening for on this call?
Absolutely. Well, on the call, I think the main thing that people are going to be focused on is the guidance for the second quarter as well as the rest of this year. In terms of execution, that's an important statistic that you just pointed out there, John. But we've known that. Under Kirby, United has become a much better airline in terms of execution, and that's what that statistic gets to. But again, on the call, the focus is going to be Q2 and the rest of this year, and the fact that they're much more optimistic than where the street is right now.
It's interesting. I thought there was another headline about Southwest I saw a day or two ago that suggested something different still about the challenges that they are having running things. How much is that execution, whether it's in flight systems, technology, affecting the outlook for these airlines right now, and what analysts and investors should be listening for?
Well, I think that's certainly part of it. All of the airlines are feeling greater pressure to do a better job in terms of execution. They did not have a good summer last year, John. I'm not telling you anything everybody doesn't already know. We saw what happened in terms of their inability to ramp up and meet the demand that was out there and to do so in a smooth fashion. They expect it to be better this summer. Look, if they have a relatively smooth summer, that'll go a long ways towards reassuring people that the airlines have come through the pandemic, have come through all of the problems that they had in terms of staffing up, and that the trajectory should be moving higher from here.
All right, Phil LeBeau, thank you again. That stock right now higher about 1% after hours. That's United Airlines.